So today we're talking about GASB 84, and I just want to start by taking a quick step back. Let me get the presentation ready here. And talk about where this requirement comes from, and it's something we don't talk about all that often as a department. So we're all required to comply with generally accepted accounting principles when we do our financial reporting, GAAP, and there are multiple versions of GAAP. There's international GAPs. And in the United States, there's two different forms of GAAP. The first is the FASB, which is the Financial Accounting Standards Board, and their version of GAAP applies to all for-profit and not-for-profit entities. So if you come from one of those, you maybe had a slightly different version. The GAAP that applies to all of us as state governments and local governments, and that includes a large swath of things such as cities, counties, sewer districts, school districts, and multiple forms. We all have to follow the GAAP that is prescribed by the GASB, the Governmental Accounting Standards Board. And so how the GASB prescribes GAAP is through a hierarchy, and there's two types. So the type A is when they issue statements of government accounting standards, and that's what we're here to talk about today. They issued a statement number 84 related to fiduciary funds. So that's what we'll be mostly focusing on, and that's the source of what we're going to be discussing. And then the type B is they can issue technical bulletins, which they don't do very often. They also issue implementation guides, which there's one specifically related to fiduciary funds. And then they'll occasionally clear AICPA literature. So as a disclaimer, one thing you don't see on there is my name or the department or the state. So we have no authority in how this is written, what the rules are. That is all from GASB, and they are the only ones through their hierarchy that can tell you how to comply with GAAP. So GASB 84 is a dense thing. I can't cover all of it, so I'm going to focus on things that I think are the most relevant to Wisconsin school districts. GASB 84 also talks about slightly different requirements for component units. And I don't think there's a lot of, if any, component unit out there in school districts. So I'm not going to cover anything related to component units. If you have one of those, you'll have to go through that separate analysis. So GASB 84 is effective right now, 1920. I have a link, if you have access to the PowerPoint, to statement number 84. It's 10 pages long. It's very dense. There's a lot of ifs and ands and different criteria that we'll certainly work through. Because of the complications of that, they have a flow chart towards the back as a supplemental thing that you may find useful as you go through evaluating if your activities are considered fiduciary or not. The other thing I talked about is guide. That's also linked there. Implementation guides are kind of like a Q&A, an FAQ type thing. So throughout the PowerPoint, I'll have a number of examples from the implementation guide, and we could talk about those then. I can't include all the information on each one because of the size of the slides, so it might be helpful for you to go back and reference and read the actual full text. So when GASB talks about GASB 84 and they give presentations, they kind of format it as step one is establishing if something is fiduciary or not. And then if it is, they talk about what the requirements are for reporting it. When I talk about it, especially with the focus on Wisconsin school districts, I like to flip that a little bit. So in this presentation, I'll be starting by talking about what the WOFR fiduciary funds are. And then based on what's in GASB 84, what should and should not be in those funds, and then the ramifications of those determinations. So high level, and there'll be exceptions or nuances to this, but high level, what we're going to be talking about today when we say fiduciary funds is fiduciary activity is when the government or school district is taking care of money that belongs to someone else, not the school district. So that sort of frames what we're talking about. You are involved with the money, but it's not yours. So in GASB 84 and also in WOFR, there are 4 fiduciary funds. That's the pension and OPEB in Fund 73, investment trust funds in Fund 76, private purpose trust funds in Fund 72, and all 3 of those are trusts. So when we get to requirements, that's something to keep in mind. And then Fund 60 is all other fiduciary activity that is not a trust. Previously, these were known as agency funds. There's a lot of changes in this area, And so I think part of that reason is they've now renamed it to sort of emphasize this. So now we're going to be talking about custodial funds in Fund 60. So for the first three types of funds, we have criteria for it to be considered a trust, and you must meet all three of these. So to be a trust, GASB 84 says your assets are administered through a trust in which the school district itself is not a beneficiary. The assets are dedicated to providing benefits to those recipients in accordance with the trust benefit terms. And the assets associated with the trust are legally protected from creditors or people who might try and sue the district, who's acting as a fiduciary. So if you have a trust and someone is trying to collect money from you as the school district, they would not be able to access these types of funds. And the GASB also says they have this equivalent arrangement, which basically says if it's not a legal trust by name, by legal definition, but it still meets all three of these requirements, it can still be considered a trust. So from this point forward, when we say trust, it's going to be trust or an equivalent arrangement that meets the same criteria. So the first concept that then applies to all types of fiduciary activities is one that's called control of assets. And control of assets is when the school district either holds the asset or has the ability to expend the asset. So I like to think about this as like a checking account. If you have, you're holding money for a different entity, you have their checking account, or you have the ability to write checks from that checking account. So when we go back to think about the definition, you're taking care of money that belongs to someone else. That's what the control of asset. If you don't have control, then we're not really talking about fiduciary at all. So the first fiduciary fund is pension and OPEB in Fund 73, and the requirements for something to be a pension and OPEB trust fund is that the government controls the asset. It meets the pension and OPEB criteria that are established in the previous GASB statements 67, 73, and 74, or it meets the trust criteria and the contributions in that pension or OPEB trust are irrevocable, meaning they're vested to the participants of those programs. So we don't expect a lot of change in this area. That's pretty much always been the definition for Fund 73. I'll give the disclaimer with all of this. You should review your activity. I can't give general statements, but in general, we don't think that there will be any changes to Fund 73. So then the next concept that applies to all of the other fiduciary funds other than pension and OPEB is this concept of fiduciary assets not being derived from certain types of activities. And so I kind of flip it and say fiduciary activities are derived, but it's not a fiduciarily derived asset if the source of money is from a government mandated non-exchange transaction or voluntary non-exchange transaction. And so a lot of these coming through would be things like property taxes. Those are considered government mandated non-exchange transactions. And then we also have it can't be from your own source revenues. And GASB 84 says an own source revenue is when you're requiring something as an exchange or exchange-like transaction. And this is the first instance where I'm going to include anytime you see IG and a for.sum, that's from the implementation guide directly. So question 4.36 in there gives an example where a school district requires all students to pay a fee for programming in exchange for something you're going to provide to them. So I kind of think of this like if you have a materials fee that you charge to all students, then in return you're providing materials. So in that case, what GASB is saying, those are own source revenues. You're not really holding someone else's money. This is your money. So that's just sort of one of the foundational structures of how the assets are derived in addition to the control component. So Fund 76 is the investment trust fund. And I don't think there are many of these, if any, out there, but I just wanted to cover it. So the requirements for that are it must meet the trust requirements we discussed, the control of assets, and the assets being fiduciarily derived. And then what's Fund 76 is if you're in charge of this investment pool, you have your portion in, say, Fund 10, and then you have everyone else's portion that participates in Fund 76. So this has always been the requirements for Fund 76. Again, we don't anticipate any real changes related to Fund 76. So here's where things start to diverge. In Fund 72, private purpose trust funds, I think a lot of people have historically thought of this as a scholarship fund, which is probably most of the activity in there and could be going forward. But now there's additional requirements. And the first and one of the critical ones is for it to be in Fund 72, you must now meet those trust requirements. So if your funds are not in a trust or an equivalent arrangement of a trust, that activity should no longer be in Fund 72. So if you have some sort of smaller type donations that are not in a trust, what GASB is saying is you don't meet this trust requirement and they therefore shouldn't be in Fund 72. So the other requirements are the same as the other ones where we're talking about government controls the asset and the assets are fiduciary derived, and then the trust is not one of the other funds for pension, OPEB, or investment trust funds. So because of that trust criteria, we do expect when some districts look at what their activity is in Fund 72, anytime you don't have a trust related to activity in there, GASB 84 is now requiring those to be moved outside of Fund 72, and we'll talk about a little bit later of where they might go. There's a couple of options depending on how things are set up. But that's the first part where we start to notice a change that the GASB has prescribed that is going to be impacting how we do things. So Fund 60 is where we're going to see the biggest amount of change, and it's the most complicated area. There's a lot more requirements that go in it, and so this will probably be more technical in a lot of areas, but high level, the requirements for something to be in Fund 60 is now that you have assets, but the trust no longer applies. So these are all the non-trust type arrangements. The government controls the assets and they're fiduciarily derived, and then it has to meet either the benefit of organizations test or the benefit of individuals test. I'm going to start with the benefit of organizations. It's a little more simple and I don't think it applies as often, but the GASB is saying that for something to be the benefit of an organization, the following two things must be true. That the benefit of the organization or other types of governments is not part of the financial reporting entity and that they are legally separate. And so when we talk about benefit of organizations, even if something is considered an organization, like a student organization, if they're not legally set up as separate, they're not going to be evaluated under this benefit of organizations test. There's another test for they're considered individuals if they're not legally separate. And then the other thing that applies to both of these is that the assets are not derived from the government's provisions to provide goods and services to those organizations. So basically, you don't have a requirement as part of your organizational operations to actually provide the goods or the services to those organizations. These are sort of voluntarily extra type organizations that are existing that are not your basic requirements for graduation. So the implementation guide goes through a number of examples related to if something is for the benefit of organizations or not. The first one talks about holding funds for a legally separate 501c3 scholarship fund. And they say that does meet the benefit of organization because this scholarship fund is legally separate. The second example they give is if you have a student activity club and they do fundraising, and all of the fundraising that they do is being donated to some legally separate not-for-profit organization. And that means there are absolutely no benefits to the club that is doing the fundraising. Because all of that money being raised goes to some legally separate entity, that is then meeting the benefit of organizations criteria. So I don't think either of those are probably all that common. We're probably more in this third spot. So the example for 16 talks about a district's chess club, which is not legally separate, does fundraising for them to be able to hold club tournaments. And what the GASB and the implementation guides say is because they are not legally separate, they're not meeting the benefit of organizations. You need to evaluate them as benefits of individuals. So I think the takeaway from the benefit of organizations is this legally separate component, which I'm guessing we don't have all that often. So then when we talk about benefit of individuals, this is where things get a little more complicated if they're not already. They say that for the benefit of individuals criteria, you must meet both things. The assets must be for the benefit of individuals, and that the school district does not have administrative involvement or direct financial involvement over the assets. And if there's a key takeaway to this presentation in my mind as it relates to school districts, it's this concept of administrative involvement. And we'll spend the next significant amount of time here shortly talking about what is and what is not administrative involvement per GASB 84. But it can't be administrative or financial involvement to meet the benefit of individuals test. And then that same not derived from government provisions is included again. Basically, this is some sort of extra type club. So I'm going to start with direct financial involvement. It's a little more simple than administrative involvement. And basically what it says is a government has direct financial involvement if they are participating in sort of what it is. And that's usually the examples they give are through matching requirements. And so if you have student organizations that raise money and you as the school district say, we are going to match the funds that you raise 20% or something like that, what GASB is saying is now you have direct financial involvement over those funds. And once we say you either have financial involvement or administrative involvement, what the GASB is saying is that those are no longer someone else's funds. Once you're involved administratively or financially, if the answer to that is ever yes, those are not to be considered custodial funds. They're not to be in Fund 60 because they're saying that involvement that you have now makes them your funds in terms of reporting. And so now that has to be in one of your governmental type funds, a Fund 10 or a Fund 21, something like that. So they give 3 examples of administrative involvement. The first is if you monitor secondary recipients for compliance with program requirements or determine eligibility of recipients, even if using a grantor established a criteria. And the third one is the ability to exercise discretion over how funds are allocated. And so GASB combines these first 2 into question 4-25. And what that example says is if a school district receives scholarship fund money from an external group, and that group says you should award that scholarship to a math student that's excelling, that's meeting the requirement of determining eligibility. Even if you pick who that math student is, you're now falling under this monitoring, and they're saying you have administrative involvement in these funds. And then the example goes on, they combine them to say, or you're monitoring that individual scholarship recipient at a post-secondary to ensure they maintain a certain GPA. That's their example of saying you're doing a compliance monitoring of those. So again, high level, once we start saying we're meeting any of these criteria to be administratively involved, then those are no longer considered custodial funds and should not be in Fund 60 anymore. So the third way that you can meet this administrative involvement is what they call exercising the discretion over asset allocation. And there's going to be a number of examples of this. This is, I think, the most common thing that when we talk about GASB 84 in school districts is being evaluated in terms of administrative involvement. So we'll go through these and just trying to reiterate again. If the answer to any of these is yes, you have administrative involvement, then they're no longer custodial funds. If it says no, then you don't have administrative involvement and you evaluate if you meet all of the other custodial fund requirements for something to be or remain in Fund 60. So the first example of discretion over asset allocation is Implementation Guide question 417. And what that says in that example is essentially a school board is establishing a policy for how fees for student organizations are to be raised and spent. And so if you have a policy that's sort of directing that, they're saying, yes, you have administrative involvement. The second example is if you have a student club or club president and they alone are establishing how resources can be spent, and they're really the group that is approving and determining how funds are spent. This is one of the exceptions of when it's saying no, because it's the student club or the student president determining how those funds are being spent. Now you don't have administrative involvement. This is an example of when something could remain in Fund 60. And the GASB goes on in this example to sort of say you need to use a substance over form consideration, because what a lot of these student organizations have are faculty advisors or some sort of school district representative that is involved in how these things operate. So when we start talking, we'll talk about that more. So they changed 4-18 to basically say if there is a student club and a parent or parents of that club are the ones that determine how those club resources can be spent, that is also not an example of administrative involvement, because these are parents, they're not representatives of the school. So 4-20 says, in the absence of any sort of district policies related to this, if the student club disbursements are approved by a faculty advisor, that ability to approve, reject, or modify how those funds are spent, even if the organization is sort of initiating the transaction, if there's an approval process on top of that by the advisor to say, yes, you can spend money on that, or no, you can't, or maybe you should consider this instead. Once that administrative advisor is having that involvement as a representative of the school district, the GASB 84 is now saying you have administrative involvement. These are not custodial funds. They're not someone else's funds. They're now your funds because of the involvement that that employee of the school district is having over how funds are spent. And once the answer to that is yes, now we can't have that activity in Fund 60 anymore. It has to be moved to a Fund 10 or a Fund 21, a governmental type fund. So I think we get into situations where I think people ask a lot of questions on this. Well, what does this mean? And they did give one out in this, and they said if the advisor's ability is just a rubber stamp, if it's more than if that's all that approval means, then it's not really an involvement, which I don't know how to necessarily interpret that. I don't know what the point of a rubber stamp approval would be of an academic advisor. I would assume when you get something and it's signed by someone that carries some sort of weight. So this is something that I think a lot of districts, when they're evaluating your activities, this is going to be one of the key things. The expectation is sort of for you to go through your student activities or your other activities in Fund 60 and go through this process and determine if you have administrative involvement over these funds or not. And I think it's going to come down to a lot of saying, do we have faculty advisor approvals? If so, what do those approvals mean? And I think what I'm hearing from a lot of districts when I talk to them about that is that faculty advisor approval does carry weight. They can say, no, don't spend money on whatever it would be. They have the ability to do that. And so once we're there, we're saying, yes, the district has administrative involvement. So a couple other examples that the implementation guide goes through. 421 talks about a district policy setting guidelines on how funds can be spent. Once again, yes, that is administrative involvement. They give a caveat to that in 4-22 and to say if your policy only prohibits illegal activities, then somehow that's no, it's not substantive in terms of what the involvement of the district is. And again, these also would assume that these are the only things that would be dictating how funds are being spent are these policies. If you have a faculty advisor, then you're already using those other examples. So in conclusion about the discretion over assets, the sort of wraparound is that if districts have policies, generally that's considered administrative involvement. If you have faculty advisors who do approvals and it's more than just a rubber stamp, that is administrative involvement. And anytime you have administrative involvement over those funds, you're not meeting the benefit of individuals criteria that is necessary to be considered a custodial fund recorded in Fund 60. So what a lot of people have been asking, well, it sounds like everything we have in Fund 60 falls under that category. What's even left in Fund 60? Can we delete it? And we're not going to go that far. We think that each district's going to go through this, and there'll certainly be districts that don't have a Fund 60 anymore. But some examples of things that we think could still be in Fund 60 is anytime you have a student org with no administrative involvement, meaning you have not the faculty approval, you might have parents, you might have some sort of national type organization that gets involved in how funds are spent. Or if you have any parent organizations and the parents are the ones that are determining how funds are spent, again, that same administrative involvement piece comes into play. So ensuring you don't have administrative involvement over how parent orgs are deciding to spend funds. Another could be non-trust scholarship funds where you don't have administrative involvement. And this would basically have to be something where there's some sort of external group to the district giving you control of those funds, but the external group is really the ones determining who the recipients are, and the district does not have any further monitoring compliance requirements. And then I'm sure there's other examples out there of things that may be appropriate in Fund 60. So then what will not be in Fund 60, what will have to be moved out of Fund 60 as a result of this GASB 84 statement includes things, student orgs where there is a administrative involvement, parent orgs with administrative involvement, temporary fee deposits or school or principal accounts. What Fund 60 is supposed to be is money that belongs to someone else. So if you're having temporary fees or you're having money that belongs to the district and it's a principal account or a building account, those are not considered custodial fees because those are your money. So the GASB is clamping down on this area to say, if these are the things you have in Fund 60, they can't be there anymore because they're your money. They really need to now be accounted for in one of your governmental funds, a 10 or 21. So that's a big impact. And I certainly want to acknowledge what this means. And we certainly have a lot of empathy in terms of the changes that have come about as GASB 84 and some of the other historical and upcoming changes. There's been a lot going on lately. And this is another one to sort of add on the pile. So when we talk about scholarships, just sort of laying out where they may fall in. Again, if you're in a trust and you meet the trust requirements, those scholarships should remain in Fund 72. If you have one of the scholarship funds where you don't have the administrative involvement, you're meeting those other custodials, those should be in Fund 60. And then anytime it's neither of those scholarships now have to be accounted for as governmental in Fund 10 or Fund 21. So when we talk about evaluating the activity, again, if it's not meeting one of the definitions, it has to be recorded in one of your governmental type funds. I know I've said this a lot, but this is really the sort of key takeaway and the ramifications of what GASB 84 is doing is a lot of the activity we may have accounted for previously in a 60 or a 72 no longer meets that criteria of belonging to someone else due to our involvement in those funds. And so those now have to be moved to a Fund 10 or a Fund 21. So if that wasn't enough, what GASB 84 also now requires is For all four of those fiduciary type funds, they want in your financial reporting package a statement of fiduciary net position, as well as a statement of changes in fiduciary net position, which means you have to record revenues and expenditures disaggregated by source and type. And this includes Fund 60, which is new. We never used to have revenues in Fund 60, but so even if you determine something meets the definition of custodial in Fund 60, GASB 84 is now also requiring you to account for those revenues and expenditures. So there's not really an out to this. They also changed what's considered the due to organization liability from what it has historically been. And what they're saying now is due to student org should only be used when actually that organization is directing you to spend those funds. Without that, it's not really a liability in accounting terms because you still have that money. And so because of that, we're now going to have fund balances in Fund 60. And so in Woofer, we've created this restricted fund balance for custodial funds, account 936,600. So prior, in the old accounting up until this year, agency funds in 60 did not have revenues and expenditures. The assets, which is usually cash or investment, equaled the due to orgs, parent or student org liability, and therefore there was no fund balance. Again, none of that applies anymore under this new GASB 84 statement. In Fund 60, we have to report revenues and expenditures. We have a lot less that meets that due to orgs liability. So our assets are usually going to be more than our liabilities, and therefore we are going to have a fund balance now. So with all these changes in GASB 84, we've updated Woofer with revision number 34. There's a link to the Woofer document. On that page, we also have a summary we sort of written up trying to summarize GASB 84 and what it means to school districts. If you want to sort of go back and refresh or try and explain this to someone else, you might find that document helpful. And then once you get past the evaluation process and we start talking about, okay, well, now we have to move things, how do we move it? We created this spreadsheet that we sort of anticipate being the various scenarios and the entries that are required to move those funds. Technically, on your financial statements, these are going to be prior period adjustments. The Woofer doesn't have any concept of prior period adjustments. So anytime we're moving things from a fund to another as a result of an accounting prior period adjustment, we have to use source and objects 969 to. So that's what you'll see in a lot of the entries. You're not adjusting beginning balances because in Sapphire, beginning balances must equal ending balances. So it's kind of a nuance and certain something specific to Woofer. We also changed numerous titles and definitions to align with the GASB 84 terminology. In Fund 60, we created a new object function combination of 997 and 440,000 to be representative of custodial expenditures. And then we also prescribed some local optional functions related to student orgs and parent orgs and scholarships and other things if you want to use the local optional codes. They also talk about disaggregating by source and type. So the examples they give in GASB 84 relate to investment earnings and costs, as well as administrative costs. So if you have any of those in Fund 60, we've also allowed these typical function object combinations that go along with that type of activity, as well as all the adjustments. And then we added to Fund 60 what we consider to be the typical types of activities that would be recorded, educational program sales or fundraising, and then the miscellaneous adjustments and student activity fees and stuff like that. So those are the ones we added to Fund 60. Mentioned this earlier, we also created balance sheet account 936,600 to be the Fund 60 fund balance restricted for custodial funds. In Fund 10 or 21, there had been a push a number of years ago to sort of, I guess, air quote, clean up student activity funds and things that were in Fund 60 that kind of didn't meet the previous agency fund. So a lot of districts may have already moved some of this activity to 10 or 21. So we didn't think that there was a whole lot of changes needed to fund 10 or 21 because a number of districts already were using those codes. We did add function 450,000 to be for scholarship activities to go with the objects of who you would typically pay those types of things to, the private schools and the Institute of Higher Education and stuff like that. So I think one of the takeaways, one of the questions, once you sort of get through the acceptance phase of what GASB 84 is and what it means and all the work that goes along with it, once we start having a good grasp on the requirements of GASB 84 and what meets the definitions, the next question everyone tends to ask is, okay, so I'm moving all my student orgs from Fund 60 to Fund 21. How am I supposed to track those organizations? It's not that liability account anymore. And as a department, we certainly acknowledge the challenges that can present. And I think each district's going to vary. I don't think that there's a one size fits all solution to this problem. Some of it's going to depend on how many orgs you have. Some of it's going to depend on what accounting systems you have. So we don't have a set requirement or rule, or we just have options that we're providing people to sort of consider when you go down this avenue. One of those is certainly if you want to do it within your accounting system within Woofer. A number of districts have said that the functions codes that they use in Fund 21. So if you have each student org being its own individual 160,000 type co-curricular activity, if you use that function for a certain club, you could also use that function on the revenue side. And then if you create some sort of custom report to subtract that function's revenue from expenditures, you're going to sort of get that club's activities and you're going to get that club's balance. So that's one option. Otherwise, using local optional codes or project codes are other options within Woofer to sort of try and track these. I know some accounting systems offer separate activity modules. I've heard that they're not really up to par quite yet with what GASB 84 is requiring, but that's a software vendor's discretion in terms of what they offer, and your discretion is if that is the solution for you or not. And then if you want to use some sort of external tracking software or systems, some people have a lot of student activities and maybe something external makes more sense to them. I kind of think of this, if you have a lot, you might kind of think of this as sort of how food accounts work. Each sort of pupil or family has their own food accounts and you're tracking that on a separate system and then rolling all that activity into your financial statements monthly or quarterly or annually, whatever it may be. If you don't have many at all, if you decide to try and do something on Excel or some sort of other tracking, that's an option as well. So our role kind of in this regard is to sort of talk about it and provide options, but really it's going to be a district local decision in terms of how you go about individually tracking your student orgs. You can certainly talk to your software vendors about what they're doing, recommend talking to peers, throughout the conference you're attending or when you get back, talking to see what other people are doing. We have scheduled at the March WASBO Accounting Conference, we have a session where there's going to be a number of school districts presenting on what they've done in terms of implementation. And so that may be a session you or someone from your district, if they're attending that conference, finds useful as well. So again, this is effective for 2019-20. One of the things I hear from a lot of districts, and I can't say it's a best practice, but it makes sense to me, is that because of where we're already at in the year, because of the volume of work that's going to go into this, a lot of them are sort of accounting for things as they are in 1920, and then they're going to do adjusting journal entries at the end of the year to record this how GASB 84 requires it to be completed. And that makes sense to me in a lot of regards. I will say this isn't something that's going away. So that may be a temporary solution, but it's certainly not recommended long term, especially as we talk about 2020-21 being the first year of the new DPI reporting model, WISFIP, which will be replacing Sapphire. And that is a system where districts' books are being pushed into the system rather than uploaded and then worked on. So your books are going to have to match what's being reported. And so certainly recommending trying to get this cleaned up as much as possible before that year starts. So sort of where do we start? If you're walking away from this and this is the first time you're kind of hearing about it, certainly recommend reading GASB 84, looking at associated resources, the ones we have on our website. There's a lot of other resources out there, some of them from GASB directly. They've given some webinars. You'll need to look at your policies and procedures, and then you'll need to look at each of your possible or your possible fiduciary activities and go through that evaluation of if they meet the requirements to remain in those funds or not. The department isn't going to be that involved. I don't anticipate, at least, in looking at what you've done, unless it looks like maybe you've done nothing. That would be an issue. But your auditors are required when they look at your audited financial statement to give an opinion on if you comply with GAAP or not. So they're going to look at what you're doing for GASB 84, and they're going to have to express an opinion on if they think you comply with it or not. So we strongly suggest, if you haven't already, talking with your auditors about what does GASB 84 mean, talking about your plan to implement, making sure that they agree with the conclusions and the process that you're going through. Can't recommend that enough. Talking to your auditors about GASB 84. They're the ones that are really going to be looking at what you've done and giving an opinion on that. And then obviously your software vendors, if that's the route you go about tracking things. So with that, and I know that's a lot, I'm going to stop there and open the floor to any questions you have.